Good afternoon, it's Tristan here for T2C Trading. Just like to combine the free and premium videos this afternoon. Give a little bonus to my free video viewers on YouTube. I'd like to give two important lessons today. The first one concerns the markets and not being able to go lower. Let's take a look at the Dow today, October 23rd. The Dow opened this morning and we were already down in triple digits. Now I was following some social media, some Twitter, what was in the news, on some blogs and on some websites. And what I was hearing was people saying the market cannot go lower. Get long, nibbling long, market can't go lower. Well, surprise, it can. And we all know that the market can go as low as it wants to. Just because we're down 150 in the Dow doesn't mean that we can't go to 200. Just because we're down at 200 doesn't mean that we can't go down to 300. It doesn't happen very often, but it can happen, and it's not a great way to earn a living. These counter trend trades, you will get run over. So what did we do? We opened down, strong down, triple digits. We had a little pop up, we sucked some people in, and then what did we do? We went from about 13,110, 13,150, 115, all the way down to 1320. 90 tick drop in the Dow after people said that the market could not go lower. So just keep this picture in mind, print off today's chart of the S&P or the Dow, and say to yourself, can and will the market go lower? Now let's take a look at another tip. Usually charts look the same, but we can, when we're setting up our chart, use either a 24-hour chart, like I'm showing right now, or a daily session chart. Now sometimes these two charts show vastly different pictures. Let's take a look at today. So the first chart I'd like to show you is a chart I usually use. It's a 24-hour session, which means it tracks price 24 hours a day as long as the futures markets are open. As we can see, we show a very strong downtrend into this morning. So what do? We say, wow, this is a really strong downtrend. Let's short. But what happens is, if we short at the wrong time, for example, if we short right from the beginning of the session, we will probably get stopped out. We open down and around here. We actually pop up about 20 ticks, which is people's normal stop, and then we roll over. We also are really eager to get in because we've come into the markets, we pull up our chart, and we see that the market has sold off a crazy amount, and normal human nature, we want to join in. So if you feel like you're jumping on the trend, and you're actually a little late to the party in the morning when the market opens, try using a daily session chart, and I'll show you what that looks like. As we can see, when we look at a daily session, number one, we can clearly see the gap down that happened in pre-market and after hours trading yesterday. We opened down. Second, what we can see is that when the market opened, it wasn't as easy to trade as a 24-hour chart looked. We actually traded in one channel. We broke that channel, and for the rest of the day, we traded in a narrow range, and in the afternoon we traded in a 20 to 30 point range. So for the Dow, it was actually a pretty tight trading range. The move happened last night and early this morning. We could have caught a little bit of move off of the sell-off in the morning, but if your plan, like most people's plan, does not include trading over the news, then this sell-off here was not tradable. So hopefully these lessons can help you have a better picture of the market and judge the market a little more clearly. For T2C Trading, this has been Tristan.